Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ed Cofrancesco, CEO of International Assets Advisory, to discuss why the use of defensive strategies such as covered calls and protective puts and profit taking are the most prudent course for the average investor in today's market environment. Ed, it's great to see you again. Welcome back to Trade Talks.
Thank you.
All right, let's start with the backdrop and the questions that surround what the end game is with Russia's invasion on Ukraine.
You know, Jill, that's the problem. I don't think any of us really know what the end game is. And how much longer is this geopolitical drama going to carry on? And then what happens with China and the Taiwan situation? This could be going on for many more months. So this is very disconcerting. And of course, our hearts go out to all the people in Ukraine right now. But in terms of U.S. markets and their effect, there's just nothing good on the geopolitical horizon right now.
Right. And what are your thoughts around the domestic mood of investors? We certainly have a number of issues that we're focusing on here as well.
So, we may have a pandemic that may be over, maybe it's not. I don't know. We have horrible inflation. And right now, the average American seems much more concerned about inflation than the pandemic. And of course, that could change if we have another wave of COVID. And then we still have this continuing supply chain shortage, which frankly just doesn't seem anywhere in the near future that's going to be solved. So the sentiment from the average American seems to be very, very pessimistic right now. Polling shows that by far the majority of Americans think the nation is going off in the wrong direction. But none of us can seem to agree on is what is that direction. The only thing we can agree on is that we've lost faith in the media, we've lost faith in our elected officials, and we've lost faith in the institutions of government. To us, that portrays a situation where markets, equity markets in particular, have historically been a reflection on the sentiment of people's mood. And so we see a pessimistic mood. What we see is an American public who's scared, angry, and confused. So for the market starting today, only being off about 10% from their all-time highs, we think that's either a miracle or delusional thinking, but we should be grateful that they're only off 10%.
So how are you positioning in the face of geopolitics, inflation, supply chain constraints, just a general sour mood?
We think, again, that using covered calls, protective puts, profit taking, trailing stops, all defensive measures should be used. Now, that doesn't mean we don't think there's a trading opportunity for very aggressive investors, but the average investor shouldn't be playing with dynamite. Now, if you're a very aggressive investor, we think that the markets will continue to whipsaw around for the next few months, but still trend lower overall. So you'll have an opportunity to buy on lows, sell into good news, buy back when there's bad news and the stocks sell off again. And we think you'll be able to do that for a few more months, but we do think that there's a major correction. Unless some of this bad news that we've been talking about starts to right itself in the near future, we think ultimately there'll be a major correction and that we can wind up off another 25 to 40% from where we are now. We really have been looking for correction in the 35 to 50% range. And I know that sounds very ominous, excuse me.
Right.
But in the same token, we believe in the robustness of the markets and then eventually they'll rebound. But for now, that's our concern. It doesn't mean there isn't some attractive opportunities out there right now.
So, Ed, let me ask you this. Before Ukraine and Russia really made it into the headlines in the past couple of weeks, it seems as if the market was starting to digest the fact that we are going to get rate hikes in March. We're really debating, is it 25 bips or 50 bips? Is it going to be 5, 6, 7, 8 this year? That really was, I guess, the most important thing on investors' and traders' minds. Do you think the volatility that we're seeing now is exclusively isolated to geopolitical issues? And aside from that we could have potentially found a bottom there, or we're just going to be in a volatile environment regardless?
Yeah, I think it's very much the latter and not the former. That we were going to be in a volatile market, and any bad news will spark this type of thing. And this is really bad news today. I mean, I don't want to underestimate how bad this news is, and I can't predict how bad it will become. It may be over shortly, and maybe we will reach a diplomatic solution that allows both sides to save face, or this could really be bad. But there's just so much bad. We're looking out on the horizon. I feel like I'm standing on the deck of a ship, and all I see are dark clouds right now.
So what areas in the market do you expect to relatively outperform?
So again, oil producers in this time of uncertainty, and we know that there's going to be shortages, continued shortages. oil and natural gas, all of the natural resource production. So we like oil producers. Again, we think that ExxonMobil is the cream of the crop here in the U.S. equity markets in the fossil fuel producers. So we like ExxonMobil. In times of uncertainty, in times of high inflation, gold has always been the safe haven. We still love GLD. It's a safe, easy way for the average investor to play gold. So we like precious metals overall, but in particular, we like GLD. We also think more long-term, if you have a more long-term outlook, that the supply chain shortage, and in particular the chip shortage, has forced the auto manufacturers to reimagine how they operate, and we think for the better. And we think that there's going to be some permanent improvements in the auto producers in this country that are going to have real benefits for them. And in that group, we have been a fan of Ford, and we remain very, very bullish on Ford in the long term.
All right, and appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.